And welcome back to Investment Banking University. This is our investment banking course, and we are on the second side of the perpetuity, the sell side. And we're actually discussing the responsibilities of the investment banker. And in particular, we're to the topic of building a boutique investment bank and what is required. We've already talked about the how to build a boutique investment bank methodology, and now we're getting into running the boutique investment bank. So, in building AltQuest's initial book of business, we sent over 2,000 emails to our initial coverage groups, industrials and manufacturers. The response rate was approximately 2%, and of those that responded, approximately 50% were interested in selling, and 50% were interested in taking an offer on their business. So, of those that were interested in selling their business, approximately 50% accepted our fee agreement. When first starting an M&A firm, the majority of time should be spent originating sell-side mandates. Once the investment banker gets to about 10 to 20, depending on the size of the mandate or the engagement, uh, the one can ease up on origination and transfer those responsibilities to analysts and associates, which can be hired as interns, which then turn into full-time analysts and associates as they move forward through the process. This means that all of the investment banker's time will now be spent on M&A execution, with sell-side pitches from time to time when the analyst or associate originates an opportunity. Good analysts and associates will originate 2 to 3 sell-side pitch opportunities per week, so the investment banker will in fact stay busy on the phone and stay on the phone with CEOs, founders, and partners. Realistically, it will take about a year and a half to close your first deal if you are just starting out in investment banking. If you've been in M&A and have a book of business, the time frame, of course, shortens to the typical time it takes to close a deal, which is shown below. So it's important for the M&A professional to plan for this extended time frame and not to get discouraged when deals blow up, get delayed, or change. All deals associated with an actual perpetuity close. It's just a matter of time. So now we're actually going to go in and talk about investment banking deliverables, what is required. And so there are, of course, the teaser, the SIM. We're going to talk about intermediate deliverables such as adjusted EBITDA as well as valuation. So the investment banking requires a certain set of deliverables from coverage to origination through sell side representation. So in terms of the deliverables that we're going to be talking about, we're going to discuss the pitch book associated with origination. We're going to talk about adjusted EBITDA, valuation, teaser, and the SIM related to a sell-side mandate or a mandate in general, as well as the LOI and purchase agreement. So in terms of adjusted EBITDA, after receiving the financials for the target, the investment banker must calculate adjusted EBITDA and take out non-recurrings. And so the calculation of EBITDA looks like the following. So what we're ultimately seeing here, this is a model we had used for a sell-side engagement. And this is looking at the target co from 2013 up until 2016. So we're looking at 2013, 2014, 2015, and then a year to date for 2016. So this moves through, and this is a P&L, and it's calculating from EBITDA to an adjusted EBITDA figure. And as you can see, there were adjustments at the bottom for owner's salary, auto, insurance, and credit card. That adjusted EBITDA calculation is going to be the basis for evaluation. So after arriving at an adjusted EBITDA, the investment banker will determine public comps and extrapolate a multiple for the target company, adjusting for size of the company. And then from there, precedent transactions will be spread to determine a mean multiple. Finding the midpoint of the valuation methodologies can be used for determining the valuation, but the range is often communicated to a client or potential buyers in terms of a simple multiple. So in terms of a company's multiple, we're going to see that as the mean or median as 5. In terms of precedent transactions, we're seeing about a 5.5. And so this has an implied valuation for comp companies of about 5 million, and then for precedent transactions, it's about 5.5 million. And so we're taking the valuation midpoint there. It's 5.2 and 5.29 million for the valuation. In terms of a teaser, after finding adjusted EBITDA and determining the valuation, the investment banker can then build the marketing material for the target company, which includes a teaser and a sim. The teaser can be broken down in the following manner, and we're going to talk a lot about how the teaser gets broken down, and we've already talked about that in the M&A process, but we're going to get into it in cases. In terms of a sim, a confidential information memorandum. After creating the teaser, the investment banker goes into greater detail in a marketing document called the sim. This document is distributed to buyers after the teaser and is for serious buyers to do an in-depth analysis of the target. In terms of a purchase agreement, after the strategic or financial buyer decides to draft an LOI and proceed with an acquisition of a given target, the purchase agreement will need to be drafted. In the lower middle market, the investment banker may draft the agreement himself or herself, but as transactions get larger, M&A attorneys will be involved and take the lead when creating the purchase agreement. The investment banker stays actively involved in the drafting of the agreement, however. So that's it for this video. In the next video, we're going to move to the third side of the perpetuity, known as the buy side.